So hello guys. Today in this video we're going to talk about one important topic, which is trading versus investing. Right? A lot of people when they hear these things from their friends, they are not clear, right? One of your friends might say that I had invested like 50,000 rupees last week, or yesterday I got 60,000 rupees back today, or last this month, or whatever, like this, right? So these things, like a lot of people, your friends, you could hear from your friends, you could hear it from your uncle, parents, whatever it is. So there are multiple activities that are happening in a typical market, right? So there is trading broadly and there is investing. So trading involves putting your bets or putting your money on companies in a short period of time. Investing is like similar thing, but it involves waiting for a longer period of time. To be concise, right? Inside trading only, there are a lot of things. For example, intraday trading. Intraday trading is something wherein you place your bets at the end of at the start of the day. You put 10,000 rupees. Let's say, for example, you put 10,000 rupees on a particular stock. Let's say it's HDFC Bank or whatever. At the end of the day, you will sell it. You buy it in the morning, you sell it in the evening, or you sell it in the morning, you buy it in the evening. All those things, right? Let's say if you buy something for 10,000 rupees in the morning, and in another couple of hours, or like let's say at noon it grows into 12,000 rupees, right? So you invest 10,000, you grew it to 12,000, right? So at that time you can exit your position and then get your money back along with that extra 2,000 rupees. So that is your trading, right? And in the other thing, the investing is like wherein you read the company's fundamentals, or you read the business type, business model, and you like the business, or you like how people are loving the business, or you like how their customer surveys and multiple things. Based on multiple factors, you invest in a company wherein you become a temporary uh, owner of that company, right? If you invest, like, let's say if you're investing 1 lakh rupee on a company, right? You become 1 lakh of that company's value is given to you, or you become a partner, right? That is your investing. So there are these two are the broad things, right? Let's now go through each one of them in detail, right? And there are pros and cons for each one of them. Let us discuss through that, right? Yes. Investing and trading both involve buying financial assets such as individual stocks, mutual funds, with the goal of growing your money. Yeah, this is clear, right? Yes. Let's start with the trading. Trading is buying, selling financial assets like stocks, right, in hopes of making short-term profit. This is the key point. Yes. Though technically you make a trade anytime you buy or sell an investment, most people associate trading with active investing strategy, right? Yes. So investing is buying an asset in hopes of increasing your money over time. This is short time, this is over time, right? Over time can be different for different people. It can be years, decades, whatever it is, 100 years, 200 years, however long you would like to feel, or however long that company, whatever you have invested, is on the market, right? That's the investing. Right. So there are certain pros and cons for trading and investing. Right. Yeah. You can go through this document. It says it gives you detailed information of what is what, all those things. Right. I'm not going to delve deeper inside it. Right. Yes. So this is another thing. You might have heard this statement wherein one of the famous Indian businessmen said that around 90% of traders don't even get FD returns, right? FD returns are like 6%, 7% per annum, right? But yes, let's say you invest 1 lakh rupee, at the end of the year you get 1 lakh 6,000 rupee in an FD, right? But if you take traders, this businessman said that like even 90% of traders don't even get 6% in a year. That is why we are going to delve deeper into this topic on why Indian traders lose money in stock market, right? A lot of if you see a lot of traders, their main aim is to make quick money, right? I've seen this personally in multiple people. They think that stock market is an easy game. Anyone can put in their money and then get rewarded, but that is not the case. Sadly, that is not the case, right? these beginners, they don't research anything. They just have like 1 lakh, 2 lakh, 3 lakh rupees, and they want to invest it and then make it grow like 1 lakh 50,000, 2 lakh, whatever it is. But that is like very, very difficult. That's what I wanted to point here, right? Yeah, beginners who are just into the stock market might have, they just want to make their capital double within a short span of time, right? As we discussed, this is like close to impossible. It is possible, technically possible. More than doubling is also technically possible, but for beginners, if you take, that is not possible, right? Yes, all those things. uh, Holding the lost trade and then cutting the profitable trade, right? This is another basic mistake. I mean, this is, I wouldn't call it a mistake. This is due to inexperience, right? If you have a lot of experience, then you would not make this mistake. What they do is like they hold a, let's say a person invests like 10,000 rupees on a HDFC stock and it goes to 8,000 rupee at the mid of the day, and then I mean, they should have already exited at that time, right? It is already like 20% down. 10 out of 10% you have lost 2,000 rupees. Out of 10,000 rupees you have lost 2,000 rupees, which is 20% down. But they don't exit there because they are already in a loss, right? So they don't want to get themselves hurt and all those things. They at that time still think that they still can make it up at the end of the day. Maybe I'll go exit with a shorter loss, something like that is what their idea is. But that rarely happens. What happens at the end of the day is like that 8,000 would again turn down to 6,000 and you are like forced to exit, right? So you lost, in place of losing 20%, you lost 40%, right? And then they cut the profitable trade. Right, let's say the same example will apply here as well. You invest 10,000 rupees and it grows to 12,000 rupees, and you feel like this is a good place that I can exit, but that might or might not be a good place, right? There is still a scope for it to improve, but that you cannot predict, right? Likewise, in holding the losing trade, cutting the profitable trade also is a problem. So that's what I would suggest. Trading in itself is a big problematic area for me, at least, right? I wouldn't go trade or I wouldn't trade all my assets, right? Maybe 1% or 2% of your net worth you can use it to trade, but that too wisely, right? Yes, in trading you'll have to sit the entire day. You'll have to start your day at 9:30 in the morning, and then you'll have to end your day at 3:30 in the morning, 3:30 in the evening, right? So it's more or less like your everyday work, right? You're only going to get more stressed when you do this compared to your everyday job, right? There is no freedom that is there in trading. So these are my observations, my opinions. Yeah, you may differ, but this is what I would like to highlight here, right? Yes, this is another key point: being impatient, right? Today's generation is not ready to give the time to the stock market. They want to grow their capital as quick as possible. They don't know how to trail the stop loss and maximize the profit. Many day traders rush to book their profits and make trading decisions in a hurry, which is one of the reasons why they lose money, right? Yeah. So these are all the problems. Lack of proper research. Yeah. This is the very first reason where 90% of traders lose money when they start trading, right? They get carried away basically by whatever their friends, their uncle, their relatives say. Yeah. Okay. So this is all about this article. Let's go to another article which talks about tragic suicide of a 20-year-old day trader after mistakenly thinking he lost 730k. Right, I'm not going to again delve deep. This is a big story. This is an interesting story. You can actually read about it. I'll add the links in the description. Right. Yes. So this is another point I want to show. The steady rise in online stockbrokers and do-it-yourself investing app make it very easy for anyone with a smartphone or internet connection to dabble in day trading. Right, you would have seen a lot of ads in all your videos. Your Upstocks, Grow, or whenever you play any game or something, you'll get a pop-up ad saying that buy in this place. There will be a stock market chart that will like keep on rising, right? It's like you buy here, they show you buy here, and then it grows like crazy, and then you sell it, you make $50, $100, whatever. Then you again buy it someplace, you sell it someplace. They show it like it's like a simulation, or it's like a game, but it's not a game. It's like a serious stuff, right? That's the bad thing about studies have shown that more than 97% of day traders lose money over time, and less than 1% of day traders are actually profitable, right? There are links that are associated here, right? I will actually share this link as well. You can go through it, right? 1%, but of course nobody thinks that they will be losing out. They'll be the one that will be losing out, right? So this is the problem with this. Until unless you get you get an experience, you get a bad experience, you are not going to believe it. You still think that I have a good amount of good chance to win it, right? So this is about this article. Let me go to the next article, right? Yes, this is another key important point which I wanted to focus here, right? Yes, who should who should trade and who should invest is what the definition that we're trying to explain here, right? This is a broad example, or this is a broad recommendation, right? If you have a low risk tolerance and want to avoid volatility, right? If you are that kind of person, investing will be the way to go for you, right? But if you are a more of a risk taker and would like the chance to earn big returns fast, trading could be appealing, right? But there is no guarantee in both, to be honest. But compared to trading, investing seems like a sensible gamble. That's what I would say, right? Because even in investing, you could argue that if a company goes broke or if a company goes bankrupt, what your money will go, right? So that is also possible. But that is where we do you do your fundamental analysis. You, you understand your company, you understand the business that you're going to invest in, and then you make a decision, right? It is important to understand that trading and investing don't necessarily have to be mutually exclusive, right? This is another good point. For example, you may invest 90% of your money in a diversified portfolio and then you will hold on to it for long haul, or mark the other and 10% play money, right? This is this is a better approach, to be honest. Instead of trading all your 10 lakh rupees, you can invest your 9 lakh and let it grow, and then you play with your 1 lakh or whatever, right? Yes. Yeah, this clearly drives the point, right? However, like with gambling, it can also quickly lead to big losses, right? Investing usually means smaller short-term wins, but also fewer severe losses. This is the key point, right? Big loss is a big risk in trading, and fewer is the severe loss in terms of investing. Yeah, right. So yeah, this is about this article. Let me go to the next article, right? So this is that story, whatever we saw back there, the tragic suicide case, right? An amateur investor turned 15. I'm sorry. This is a different story. This is a different story, right? Amateur investor turned $15,000 into 1 million, then lost it all. The latest cautionary tale in the day trading frenzy, right? Robinhood user. Robinhood is a popular app, just like our Zerodha, Grow, or Upstocks, or whatever, right? This is a trading app, right? Said he turned. Richard said he turned 15,000 into 1 million and then lost everything, right? He told the New York Times that they make it so easy for people that don't know anything about stocks. Then you go there and you start to lose money. This is what I was talking about, the ad situation, right? This is so prevalent in India. I was initially worried, right? For people who are like greedy and they want to make quick money, you take today's society, most people want to like show off their wealth, or most people want to make big money or get a big name, right? So this is the trap that these guys are risking, right? These apps show you the rosy stuff, the flowery stuff, right? But they don't show you the real problem inside it. They show it like a game. They think you understand it like a game. If you believe it is a game, I mean, today's society, people are hooked into their phones or cell phones. They are into their own games, right? There is a known world for each of the games they play, all those things, right? So yeah, they make it so easy for people that don't know about stocks, right? Most people, like, take today's generation, nobody is interested in learning anything. I mean, most people are not interested in learning anything. They just want the results, right? It captures those kind of audience. So they make you understand it is so easy. You click buy sell buy sell buy sell, you make money, but that is not the case. At the end it's going to be a losing game for you, right? I'll add this link as well in the comment section. You can actually go through this, right? So yeah, that's all for today's video. Thank you.